If you're still a losing trader, this video is for you. Because most traders don't lose because they're unlucky. They lose because they keep repeating the same behaviors over and over again without realizing those behaviors are destroying them. They waste money chasing trades. They waste money trading emotionally. They waste money trying to recover losses quickly. And slowly the market takes everything from them. Not in one day, but little by little, trade after trade, mistake after mistake, until they finally start asking themselves one question: why am I still not profitable? And the painful truth is, most losing traders are focused on the wrong things. They think success comes from finding a perfect strategy, a perfect indicator, a perfect entry. But profitable traders know something different. Consistency is not built from perfection, it's built from discipline. Because you can have the best strategy in the world, but if you can't control your emotions, you will still lose. And that's exactly what happens to most traders. They overtrade, they revenge trade, they risk too much, they break their rules the moment emotions appear, and then they wonder why their account never grows. But successful traders understand something most people ignore. Trading is not about making money fast. It's about surviving long enough to become consistent. And to do that, you must stop wasting your money on emotional decisions. You must stop entering trades out of boredom. You must stop trying to force the market to pay you every day. Because the market doesn't reward desperation, it rewards patience. And that's the first thing losing traders must understand.
Now, let's talk about institutional traders. Because institutional traders understand something retail traders often ignore. The goal is not to trade more. The goal is to make high-quality decisions. A hedge fund manager is not sitting in front of charts every second looking for excitement. They are protecting capital. That's their first priority. Because professional traders know if you lose control of risk, nothing else matters. And that's where many losing traders fail immediately. They risk too much on one trade. They try to double accounts quickly. They chase unrealistic profits. And when one bad trade hits, everything collapses. But institutional traders think differently. They think long-term. They know one trade means nothing, one day means nothing, even one bad week means nothing. What matters is consistency over time. And that mindset changes everything. Because once you stop trying to get rich quickly, you start making smarter decisions. You become calmer, more patient, more selective, and suddenly your trading starts improving. Not because the market changed, but because your behavior changed. That's what separates professionals from emotional traders. Professionals follow systems, losing traders follow feelings, and feelings are dangerous in trading. Because feelings make you break rules, they make you move stop losses, they make you enter too early, they make you hold losers hoping the market comes back. But hope is not a strategy. And hedge fund traders understand this deeply. They don't marry trades, they don't argue with the market. If the trade is invalid, they exit, without emotion, without hesitation. Because protecting money is more important than protecting ego. And that's another thing losing traders must understand. Your ego is expensive. The moment you start trying to prove yourself right to the market, you start losing money emotionally instead of logically, and the market punishes emotional behavior very fast.
If you're still a losing trader, you must understand this before you lose even more money. The market is not rewarding you for effort. It doesn't care how many hours you stare at charts. It doesn't care how badly you want to become profitable. It only responds to behavior. And if your behavior is emotional, inconsistent, and undisciplined, you will keep losing. That's why professional traders focus heavily on routines and rules. Many hedge fund traders already know exactly how much they are willing to lose before they even enter a trade. Think about that. Before the trade even begins, the risk is already controlled. But losing traders do the opposite. They enter first and think later. They risk money emotionally. They increase lot sizes after losses. They chase the market because they're afraid of missing out. And every emotional decision slowly drains the account. Because many traders are not actually investing in a skill, they're feeding bad habits. Every revenge trade feeds impatience. Every impulsive entry feeds emotional behavior. Every oversized position feeds greed. And over time, those habits become your identity as a trader. That's why becoming consistently profitable is not just about learning setups, it's about changing your behavior completely. You must become more patient than emotional, more disciplined than impulsive, more focused on process than money. Because ironically, the traders obsessed with money usually lose it the fastest. Professional traders focus on execution, retail traders focus on outcomes, and that difference changes everything. A hedge fund trader can take a loss and remain calm because they understand probabilities, but a losing trader takes one loss and suddenly starts forcing trades trying to recover emotionally. And that emotional pressure creates more mistakes, more bad entries, more wasted money. That's why successful trading requires emotional control more than intelligence, because the market constantly tests your patience, it tests your discipline, it tests whether you can follow rules even when emotions are screaming at you to break them. And most traders fail that test daily. And the truth is, most losing traders already know what they should do. They know they should use risk management. They know they should wait for quality setups. They know they should stop overtrading. But knowing something and consistently doing it are completely different things. That's why consistency is rare. Because consistency requires self-control, and self-control is difficult when money and emotions are involved, especially after losses, because losses create frustration, and frustration creates emotional decisions. That's when traders abandon their plans. That's when they start gambling instead of trading. And that's exactly how accounts get destroyed. Professional traders avoid this by thinking differently. Institutional traders don't wake up trying to make money today. They wake up trying to execute properly today. Because they know if execution stays strong over time, profits follow naturally. That's the mindset losing traders must build. Stop focusing on one trade. Stop focusing on one day. Start focusing on building repeatable behavior. Because profitable trading is repetitive. The same discipline, the same patience, the same risk control. Again and again, without emotions interfering.
And another thing losing traders must stop doing, comparing themselves to social media traders. Because social media has made many traders unrealistic. People see luxury lifestyles, huge profits, fast money, and suddenly they expect trading to make them rich overnight. But real professional trading is slow, structured, calculated, boring sometimes. A hedge fund manager is not risking everything trying to double an account in 1 week. They survive by protecting capital and compounding slowly. That's why many professionals last for years, while emotional traders disappear quickly. Because survival matters more than excitement. And if you truly want to become consistently profitable, you must stop treating trading like entertainment and start treating it like a business.
Because once you treat trading like a business, your entire mindset changes. You stop chasing random trades. You stop gambling emotionally. You stop expecting the market to pay you every single day. And instead, you start focusing on consistency. That's what professional traders do. They think in months and years, not hours. They understand that longevity in the market is more important than short-term excitement. Because one emotional week can destroy months of progress. And many losing traders learn this too late. They spend years searching for a magical strategy while completely ignoring the habits that are actually destroying them. Poor risk management, lack of patience, no emotional control, no consistency. Those things quietly drain accounts every day. And the scary part is, many traders don't even realize it's happening. They think they need more indicators, more signals, more strategies. But often, they simply need more discipline. Because the market rewards controlled behavior, not emotional behavior. That's why institutional traders have strict systems, strict rules, strict risk limits. Everything is structured to reduce emotional mistakes. Because professionals know emotions are expensive. And if you truly want to stop being a losing trader, you must learn to think like a professional. That means accepting losses calmly, waiting patiently, risking small, following rules even when emotions disagree, and understanding that profitability is built slowly through repeated disciplined actions, not through one lucky trade, not through gambling, not through desperation. And maybe the biggest thing losing traders must stop doing is trying to force success. Because desperation creates pressure. Pressure creates emotional decisions, and emotional decisions waste money. That's why calm traders survive longer. They don't need to catch every move. They don't need to prove themselves to the market. They simply follow their process over and over again, and eventually consistency starts to appear. And that's the part most people never see. Consistency is not built in moments of motivation. It's built in moments of discipline. The days when you want to overtrade but don't. The moments when you feel emotional but still follow your rules. The times when you could risk more but choose not to. That's where real traders are created. Not through hype, not through social media profits, but through controlled behavior repeated over time. Because in trading, small mistakes repeated daily become massive losses eventually, and small disciplined actions repeated daily become long-term success. That's why professional traders protect routines so seriously. Many institutional traders already know exactly when they will trade, when they will stop, and what conditions must exist before entering a position. Everything is planned. Everything is controlled, because structure removes emotional chaos. But losing traders often have no structure at all. They open charts randomly, trade randomly, risk randomly, and then hope results somehow become consistent. But consistency can never come from inconsistency. That's impossible. If your actions change every day, your results will change every day too. That's why becoming profitable requires identity change. You must stop thinking like someone trying to get lucky and start thinking like someone building long-term skill. Because trading is a performance profession. Just like professional athletes, professional traders rely on discipline, preparation, emotional control, and repetition, not motivation. And once you finally understand that, you stop wasting money chasing shortcuts. You stop searching for magical indicators. You stop believing one trade will change your life. Instead, you focus on becoming better every single week. Calmer, smarter, more disciplined. Because that's how profitable traders are built. Slowly, through patience, through mistakes learned from properly, through emotional control, and through the ability to survive long enough to improve.
And in the end, that's what separates profitable traders from losing traders. Not intelligence, not luck, not secret strategies, but behavior. Because the market eventually exposes everyone. It exposes impatience, it exposes greed, it exposes fear, it exposes emotional weakness. And if you don't learn to control those things, the market will keep taking your money again and again. That's why successful traders spend more time mastering themselves than mastering indicators. Because indicators don't control emotions, you do. And once you finally understand that, your perspective changes completely. You stop asking, how much money can I make, and start asking, how disciplined can I become? Because discipline is what protects your money. Discipline is what keeps you alive during bad periods. Discipline is what allows consistency to grow over time. And consistency is where real profitability comes from. Not hype, not gambling, not emotional trading, just repeated controlled behavior over long periods of time. That's why hedge fund traders survive for years while most retail traders disappear quickly. Professionals focus on protecting capital first. Losing traders focus only on profits. Professionals think statistically. Losing traders think emotionally. Professionals accept losses calmly. Losing traders take losses personally. And that emotional attachment is expensive, because the moment trading becomes emotional, logic disappears. And when logic disappears, money follows. So if you're still a losing trader, here's the lesson. Stop trying to become rich quickly. Stop chasing every setup. Stop forcing trades out of boredom, greed, or frustration. Stop wasting your money trying to satisfy emotions. Instead, slow down, build rules, protect your capital, risk less, wait patiently, focus on process instead of profits. And most importantly, start treating trading like a profession instead of entertainment. Because the traders who survive long enough to master discipline are usually the ones who eventually become consistently profitable.